Did you ever consider why so many people chose to attend college or university? Well, some students attend college to meet their parents' desires. Most students who attend college want to earn a degree so that they may find decent, steady employment that pay well. Unfortunately, equal access to quality education is not ubiquitous, and some people earn significantly less than a six-figure wage each year. But does this mean they cannot become wealthy? Not necessarily. In this video, I will show how to get wealthy even if you only make a tiny income. When it comes to wealth accumulation, the strategy involves two components. First, there's the income factor, where more earnings allow for faster wealth accumulation. Second, the savings aspect is significant. Your savings are influenced by one factor, your spending. Because not everyone has a high-paying job, persons with lesser salaries must be especially careful with their money, seeking to save as much as possible in order to accumulate wealth. Fortunately, even if you don't make a lot of money, you can work toward financial success. Now let's go over 7 crucial steps for effectively building wealth while earning a little salary. Welcome to Cashflow Canvas, where we teach lessons about investment and money-saving techniques. If you want to make your financial future better, make sure to like this video and subscribe to our channel for the latest updates. Number 1. Set estimated goals. Whether your annual profits are millions or a fraction of that, setting financial goals is critical to your total success. First, having clear goals allows you to chart a clear course to success. This saves time that would otherwise be squandered trying to achieve your financial goals. Second, they act as a source of motivation, especially when revisited on a daily basis. However, knowing how to apply goals distinguishes individuals who become wealthy from the rest of the population. It is about discovering ways that can help you achieve your goals swiftly. One strategy for increasing your chances of success is to use the SMART goal framework. This strategy requires that your objectives be specific, quantifiable, attainable, practical, and time-bound. For example, as someone with a low income, your financial objective could be to save and invest $6,000 in 12 months by making monthly investment contributions through a financial planner. Creating a strong goal that fits all of the SMART framework's requirements significantly increases your chances of meeting your financial objectives. Number 2. Start your wealth journey today. Delay is a frequent human shortcoming. We put off preparing for retirement, chasing our dream job, or making financial adjustments because we assume we have plenty of time. However, time is a significant advantage for people with low earnings who desire to increase their wealth. You should manage your time carefully, not putting off responsibilities or spending without thinking, expecting a smooth transition to a brighter future in the next days, months, or years. Begin producing financial momentum right now by developing money-saving habits, managing expenses, and incorporating sound financial practices into your everyday routine. Number 3. Increase your earnings. Achieving wealth on a little salary is absolutely possible, albeit it will take a lot of time and effort. Fortunately, if you want speedier results, there are techniques to accelerate your path to wealth. One approach to do this is to increase your earnings. This could include finding a part-time employment, conducting freelance work, or creating your own business. Earning more money from these activities will help you acquire considerable wealth faster as long as the extra money goes toward debt repayment or investment growth. Number 4. Make a budget and stick to it. Whether you have a large sum of money saved or a little salary, creating a budget is critical. Unfortunately, not everyone realizes how vital budgets are for achieving financial goals. Recent survey results show that more than 60% of U.S. households do not have a budget, which is a major reason why more than 75% of Americans struggle to control their costs. This issue is especially obvious for low-income individuals. They must be considerably more careful with their budgeting than those who make more because they have less money to deal with. Even though some people regard developing and adhering to a budget as a hassle, this powerful financial instrument offers numerous advantages. To begin, budgets make it easier to track progress toward new targets. Additionally, having a budget lets you feel in control of your money, which reduces the stress associated with managing your finances. Finally, budgeting your income and expenses forces you to pay attention to your financial status, which leads to better financial decisions. Number 5, eliminate debts with high interest rates. Aside from excessive spending, one of the most significant challenges you'll face on your path to wealth with a modest income is the burden of monthly loan interest payments. While I regularly recommend investing unspent money to produce passive income, in most circumstances, it is better to prioritize debt repayment. As of 2022, the average annual credit card interest rate was 19.49%. It is quite doubtful that such returns would be achieved in the stock market. Thus, it is more prudent to focus on paying off high-interest debts rather than relying solely on the stock market to become wealthy. The impact of interest payments can be substantial. According to the Federal Reserve, the average American household with credit card debt will pay $1,155 in interest in 2022. While some interest payments, such as those on mortgages or student loans, are acceptable, many other types of interest can be readily avoided. Avoiding excessive interest payments allows you to preserve money for investment and wealth growth. Number 6. Start investing. Until now, all preceding procedures have laid the framework for accumulating money while earning a little income. However, it is the ability to invest that will eventually allow you to acquire the funds required to become a billionaire. The strategy of merely collecting paychecks and saving until you have a seven-figure sum in your bank account is not feasible for someone with a moderate income. To illustrate, if you earned $40,000 each year and saved $5,000, it would take you 200 years to reach $1 million. And this computation does not take into account inflation or the gradual devaluation of money. Thus, investing is the primary way to generate wealth on a limited income. Compound interest makes investing very successful for wealth creation. Compound interest is the process of gaining interest on interest, which can significantly increase the amount of money you've saved over time. This distinction is significant since $100 now will not be worth the same in the future if you simply save it beneath a mattress or in a bank account. However, with investment, you may potentially increase that $100. Investing puts your money to work for you with the opportunity of earning extra income. Consider the following scenario. You're 22 years old and earn $40,000 a year, with little more than 20% of your biweekly paychecks set aside for investing. Assuming a 6% return, you could build a $2 million portfolio by the age of 67. Number 7, enjoy frugal living. As previously said, when you have a low salary, it is critical to develop rigorous saving practices in order to support wealth growth. However, living frugally does not imply that your life must be monotonous. Unfortunately, many people believe that saving money means living a boring existence, but we can challenge this notion. I am confident that you can live a fulfilling life while also saving significantly. There are many inexpensive methods to enjoy pleasure, such as watching Netflix series or spending time with family and friends. Actually, I feel that doing a variety of free activities, such as those mentioned above, brings greater delight than spending a lot of money on a stylish automobile or an expensive watch. So if you're making less money, getting rich may need you to manage your finances carefully, but it doesn't mean you can't enjoy life. As we conclude, I'd like to thank you for watching. I hope you found value in this video and learned something new, and I look forward to seeing you in our future videos. I would deeply value it if you could like this video and subscribe to our channel. Your support will help us to create more valuable content, and we can work together to secure your financial future. What are the key takeaways from this video that you can share in the comment section?